Hey guys, so in this video I'm actually going to cover 3 stocks that I'm personally buying, watching to buy, looking to buy, have already started buying for the month of February 2021. You know what? Let's make it 5 stocks for this month. Let's talk about a few extra stocks because I am starting to see a few deals here and there in the market, and I want to have an open discussion here with you guys, share with you my ideas, and hopefully it makes you some money as well. I'll also throw in an entire sector that I'm starting to see a ton of value in, and if you're someone who's been in the market for like the last maybe year to 2 years, these are opportunities you may have not seen before, and you definitely want to take advantage of it if you are building a long-term stable portfolio. But anyways, like I said, despite the market at all-time highs, there are deals popping up here and there, and I have been deploying quite a bit of my cash here and there. But that being said, I am still being a bit conservative. I mean, it's not a cheap market by any means, but that doesn't mean we don't invest, right? We just keep deploying capital, keep being invested in the markets, and over time, things just kind of work itself out. So in this video with these picks here, I'm actually going to do something a bit different from previous months, and I'm actually just going to share my thoughts on these businesses because when it comes to the actual fundamentals of these companies, I've done a deep dive video on pretty much every single one of these for the most part. So I'll link all of those videos in the description down below. So if any of these companies I talk about today interest you, make sure to check out those videos because you'll get a much better understanding of the business, fundamentals, and metrics that I use to value the companies and why I believe that they're undervalued from those perspectives as well. So smash a like, hit the subscribe button if you're new here. Let's get into it. So Splunk is the first company I want to talk to you guys about, and I think this one may be a bit controversial because a lot of you guys love Palantir, Snowflake, or Datadog. I've heard that too. A lot of other players in this space trying to eat Splunk's lunch. But I believe out of all of these plays, Splunk is severely undervalued. It's still a great business. It's still a massive player in SaaS, software as a service, big data analytics, and cloud. It's pretty much in a sector that's going to be growing substantially over this next decade. And I think this opportunity we're seeing right now in Splunk, it's hard to pass up on. Many investors are so fixated right now with the fact that Splunk is suffering from a revenue growth. But guys, like I explained in my detailed Splunk video, this business is shifting from a one-time payment model to a recurring model. And because of that, the recurring fees are typically less dollar amounts up front, but over time it tends to be much more profitable for these businesses. So you may see Splunk, hey, revenues are down year over year, and if you read headlines, you're going to be like, I'm staying away from this company. But if you just dig deeper, you understand what they're doing, this is setting them up to be a long-term successful winner when it comes to big data analytics. So here's the chart for Splunk, and you can see we've corrected 33%, and we're still near around this level today. The stochastics at the bottom showed that we're oversold, and the stock found some good support at the 100 moving average on the weekly, and to me, it looks like this stock is ready to make a run back. Back where, you ask? Well, I think $200 per share is definitely in the cards in the short term. But that being said, I wouldn't be surprised if their earnings comes out, it comes out as a blowout number, and they shoot past this $200 mark and make new all-time highs as well. Splunk is our first company, excellent business in a growing sector. I like what I see here, and I'm buying Splunk. So our second stock, Facebook, is kind of a no-brainer investment. One of the largest companies in the world, severely undervalued company. If you look at its PE, this business is trading at a 20 forward PE. For a company that's growing between 20 and 30% year over year, for a company that is extremely profitable, for a company that has no debt on their balance sheet, high amounts of cash, I'm talking $60+ billion in cash, there's just no reason from a fundamental level not to own Facebook. I think that this company is undervalued by quite a bit. It should be well over $1 trillion market cap in my eyes. So I think there's a lot more upside to see over the stock over the long term. Now, one thing I haven't discussed in my previous Facebook video is their big push with VR. VR is starting to pick up a ton of popularity recently. You have companies like Unity Software, which ARK Invest has been buying recently, which is a big VR play. And guess what? When you think of VR, the main company comes to mind is Oculus. And guess who owns Oculus? It's Facebook. They have been putting a lot of money over the years into Oculus, into virtual reality, and I think this will pay off bigly for them over this next decade. Now here's the charts of Facebook, and we can see the stock has seen a sharp 20% correction, but since then it started to recover quite nicely as investors found value. We didn't fill the gap at around 240, but to me there was strong support down there. We saw a strong bounce, and we pretty much tested the upper range of that gap. So to me, this tells me there's a lot of buyers just waiting for prices to drop that level to push the stock higher once again. We do look very oversold on the charts for Facebook. The stock did find support at the 50 moving average on the weekly, and the stock, in my opinion, is ripe for a run to over $300 per share. Facebook is just too cheap for what the business produces today, what it's expected to produce in the next few years, and for the sectors that they play in. So this is kind of a no-brainer stock for me, and I actually bought quite a bit of Facebook very recently. So Lockheed Martin is actually a leader in the aerospace sector. They're one of the largest companies when it comes to aerospace and defense, and some of you may be, a bit more reserved when it comes to this investment. I completely respect that. This may not be a company for you. If you want to skip over this company, that's completely fine. But for those of you that are looking for a business that is undervalued, because Lockheed Martin is undervalued, and you want something that pays a dividend, has good upside with capital appreciation, and is a stable company, it's kind of one of those stocks that you have to at least consider. Now Lockheed currently pays around, I believe, 3% or so in dividends, $100 billion market cap, over, I think it was $140 billion in backlog. So this company has a ton of runway, a lot of products on order still, so it's not going anywhere anytime soon. And I mentioned they also have a cheap PE, and that's true. I believe their PE is in the low teens. So with this market, with everything, 20, 25, 30 plus PE, it's really, really hard to make a case on why you wouldn't want to own Lockheed Martin if you look at fundamentals. Now, one thing I do want to mention here briefly, which again, I did not mention in my previous Lockheed video, is something that a subscriber brought up, and that is that Lockheed has an energy part to their business. Energy, as we know, is something that will probably be disrupted over this next decade. Tesla is prime to be one of the main disruptors in that space. But Lockheed Martin has been working on energy behind the scenes for a little while, and who knows, they may actually have some good breakthrough here with this part of their business, because it is a big focus for them outside of their typical aerospace and defense. So you're getting a little bit more exposure here with Lockheed Martin. You're getting space exposure, you're getting defense exposure, and you're getting a bit of energy exposure. So it's a pretty good balance here. Now the chart for Lockheed Martin is very oversold. We've seen almost a 30% correction, and we're still sitting near the lows that we saw back in March 2020, despite this business growing in 2020, unlike many other companies that are non-tech. It's hit a key support level here on the 200 moving average on the weekly, and we've done this twice most recently, once at the end of 2018 and once last March when the whole market crashed, and both times the stock saw a swift recovery. So we're around this level again, and I think this time will probably end up being the same result. I think the stock is going to start getting bought up. Investors are going to start realizing value in this name. And before we know it, the stock will be pushing $400 plus per share and still be a pretty good value out there in the market. Now this is one that I'm watching very closely, and I do want to open a position in very soon. And those of you that are in my VIP group know that I've been talking about Lockheed for a little while now, so you know how excited I am with the future prospect of this business. So number 4, Altx is actually a company that's a little bit different from the other 3 we just discussed, in the sense that I'm not 100% in on this one. I'm like, 80 to 90% there. I like what the business is doing. I like their growth numbers. I like their future prospects. But it hasn't convinced me enough to have this in my main portfolio. Now that being said, I do own Altx in my swing trade portfolio. I bought a bit of the stock when it was in like the teens, low 120s, and now the stock is up pretty nicely since then. I think this will actually keep running over time because it got extremely oversold. This is another company in the SaaS space, software as a service, another company in the analytics space, and these are 2 things that the market looks for, and right now, Altx, because of their last earnings report, got punished, but if they deliver a good earnings report either next quarter or the quarter after, sometime in 2021, the market will be back on board with this and the stock will probably be pushing new highs. This is one of the cheaper SaaS stocks out there, pure software plays out there, and one that's growing over 20% year over year, so it's definitely worth looking into. Now here's what the charts for Altx look like. It shows us that we were recently around 40% down on this name, and I think this is severely overdone. Clearly some investors have realized this as well, and they're buying it back up here. And we recently cracked above the $130 mark after testing the 100 moving average on the weekly multiple times. This chart is showing strength, and when I combine it with the fundamentals, I really like my chances of winning with this name with some pretty good profits over time. So like I mentioned, Altx is one that's in my short-term portfolio because I'm not fully convinced on this as a long-term play just yet. However, we'll see how the next earnings report goes. I'm following this company very closely, and maybe it actually gets transferred into my long-term portfolio where I'll hold this name for a very long time. As of right now, I'm enjoying the gains, and I think this one is one you should look into. Okay, so number 5, Clorox, is a stock that's in the consumer staples space, and I think this whole sector is seeing a lot of value right now. These are typically extremely good stocks to balance out your portfolio from a lot of volatility. Now, volatility isn't necessarily a bad thing, but a lot of people don't like seeing the portfolio swing 10-20% regularly. And when you have stocks like Procter & Gamble, Pepsi, Clorox, Church & Dwight, there's a lot more. These are stocks that will remain fairly stable over time, consistently pay out dividends, consistently grow those dividends, and they're really good for balance in your portfolio. Now, I know these are not exciting companies, but like I said, if you're someone that's in this game for the long term, then you definitely want at least a couple of these, maybe in a retirement account or something, so you could just have peace of mind that these businesses are going to grow consistently, slowly over time, and you are going to have a nice amount of money invested over time as these stocks grow, say, 7 to 10% yearly, and increase their dividends, 5 to 10% annually. Now this is what Clorox's chart looks like. It's down 20%, which is rare for this name. Like I said, these are typically very stable stocks, but after its 2020 run, it's expected to see something like this. I think we should watch the 100 moving average closely. This is where we could find some support on this name. Maybe we dip a little bit below this to around like the 180 level, but I think if we see those prices, it'll be very tempting and investors would gobble that up in a heartbeat. And like I said, Clorox isn't the only name here when it comes to this. Maybe I'll make a dedicated video on that if that's something you guys want to see. I think there is a lot of value in talking about these names because not everyone wants to chase high risk, high reward type stocks. Sometimes people are happy with these lower risk companies which still provide you a good amount of returns over time. Use a compound calculator. You'll understand the value that these companies can provide you while keeping your capital relatively safe. Anyways, these are my 5 picks for the month. Let me know in the comments how you would rank these 5 stocks. If I had to rank them, I would say my favorite right now would be Facebook, followed by Splunk, and then we'll have Lockheed Martin, Altx, and then finally the consumer staples. They're not the most exciting companies, these consumer staples, but like I said, stability. That's definitely a strategy that some of us want to have in our portfolio. Anyways, guys, hope you found value in this video. If you like this new format here for the 3 stocks for the month, let me know in the comments down below and we'll keep this going for future months as well. Thank you so much for watching. Thank you for your continued support. Don't forget to invest positively and I'll see you in the next one. Peace.